Hello my dear students. So today we are going to continue with the financial statement of sole proprietorship, and we are going to take one more sum. We'll try to conclude this chapter, and today we will take one more sum on this. So here is the question: prepare trading and profit and loss account and a balance sheet of a sole proprietor of, what is the name, Messrs. Control Device India on 31st of March 2016 from the following balances as on that date. So first of all, we will mark all the items, then we will go for the posting. Okay, let's start. So what is the first item here? Drawings and capital. So see, drawings always is placed in the debit side, remember that. So the drawing refers to here 19,530 because it is in the debit side. So this is the drawings amount, and capital is always placed in the credit side. So this is the capital amount. Okay, so what happens with the drawings? The treatment of drawings is deducted from the capital, isn't it, in the balance sheet, whereas capital will be shown in the balance sheet liability side, right? Now let's go to the next one. Purchase and sales. Purchase appears in the debit side, we know that, and sales appears in the credit side. So this 45,000 is purchase, so this will go in the trading account debit side, whereas this is sales, which will go in the trading account credit side, right? Write down, note down the questions and also mark it. Okay, that will be easy for you to understand. Salaries and commission. Salaries, every time it is in an expense, but commission sometimes it can be in the credit side also. So here we can see in the credit side something is there, so we will refer this as a commission, and we know commission goes in the profit and loss account credit side, but salary every time it is in the debit. So we know where does salary go? Profit and loss debit side. So it will go in the profit and loss debit side. Carriage, obviously only debit, so carriage will go in the trading account, plain carriage, trading account debit side. Okay, moving ahead to the next one, plant and machinery. It will go in the balance sheet non-current asset, isn't it? Coming to the next item is furniture. So furniture, we know it goes in the balance sheet in the non-current asset, isn't it? Then followed by opening stock. Opening stock every time it is in the trading account debit side, the first item. Then insurance premium. Insurance premium is profit and loss account debit side item. Interest we have to see whether it is in the debit side or credit side. Here it is in the debit side, so it will go in the profit and loss account debit side. If it was in credit, then it would have gone to the profit and loss credit side. Then bank overdraft. Just a minute. Okay, just see here, rent we can see it is coming in the credit side, the 7,425, right? So it will go in the profit and loss account credit side, not debit side. Okay, so you just match up. Okay, it becomes very difficult sometimes, so you just match up. Then bank overdraft, it is in the credit. Every time it will be in the credit because the current liability. So bank overdraft will go in the balance sheet in the current liabilities. Then rent and taxes, this is their profit and loss account debit side. Wages, trading account debit side. Returns, remember that the returns in the debit is sales return. This is sales return, so it will be minus from the sales in the trading account, right? Whereas this is purchase return, so it will be minus from the purchases in the trading account, right? Then coming to the next one, carriage outward. It is an indirect expense, so it will go in the profit and loss account debit side. Debtors and creditors. So debit side is the debtor one and credit side is the creditor one. Okay, so it will go in the debit side, that is the debtor will go in the balance sheet current asset, whereas this will go in the credit side. What is the credit side will go in the balance sheet current liabilities. General expenses, profit and loss account debit side. Octroi refers to a direct expenses, so it will go in the trading account credit side or debit side. It's an expense, so it will go in the debit side, right? Then comes investment. It will go in the balance sheet under the head investment itself. Okay, before non-current asset we will write it if we follow liquidity method, liquid way of marshalling the assets and liabilities, right? Now let's go to the adjustments. So in the adjustment you can see what is given here. Closing stock was valued at 20,000, right? Closing stock was valued at 20,000. So where will closing stock go? First of all, it will go in the trading account credit side, and again the balance sheet current asset. Then interest on capital will go in the profit and loss account debit side, and again it will be added with the capital in the balance sheet. Then wages outstanding, sorry, interest on drawings is a loss for the partners or the owners. Okay, so it will be loss for them but profit for the farm, because drawings is done by the owner. So who will give the interest? Owner will give the interest to the farm. So it is a profit for the farm, so it will go in the profit and loss account credit side. It is an indirect income, so it will go in the profit and loss account credit side, and again it will be deducted from the capital in the balance sheet, because it is going to decrease the value of contribution of the owner. Then wages outstanding, it will go in the, we know that it will be added in the trading account with the wages, and again it will go in the balance sheet as a current liability. Then salary outstanding or outstanding salary, same treatment. Salary goes in the profit and loss, so it will be added in the profit and loss with the salaries, and again it will go in the balance sheet current liability. Okay, then followed with that, provide a depreciation of 5% on plant and machinery. The other day also we did that. So depreciation on plant and machinery, it will go in the profit and loss account debit side, and balance sheet minus from the asset, that is minus from plant and machinery. Okay, then coming to the next point, make up 5% provision on debtor. The other day I shared a video on that. So provision for debtors, we have to make it 5%. So what will happen? We know that first of all it will go in the profit and loss account debit side, and again it will be deducted from the debtors in the balance sheet. Okay, so let's go for the solution now. Let's start. So starting with the trading and profit and loss account, we'll make it. So the first item, we know that, we'll check what is the first item. The first item is always the opening stock. So here it is, opening stock 42,300. So we will place it to opening stock 42,300, followed by the next item. Remember, the next item is purchases. So what is the purchase? Just check out here. Purchases is 45,000, as well as there is purchase return, which is 1,440. So what will you do? Two purchases we have to write in the inner column, because we have to make the adjustments. 45,000 less purchase return 1,440, outer column 43,560 rupees. Let's write down the next item now. What is the next item? One by one you can see from the top. Drawing capital will not come, purchases is already done. We can go for sales. So sales, it is in the 1 lakh, it will be in the credit side, 1,12,500, and as well as there is a sales return of how much? 2,385. So let's see what is the treatment. By sales 1,12,500 less sales return or return inward 2,385 is deducted. So the balance is 1,10,115 rupees. Now let's go ahead with the next item. What is there? We can see the carriage. It is 2,700. So accordingly it is written here, it will go in a trading account debit side to carriage 2,700. Clear? Then what is the next item? Next item that comes is wages, isn't it? So wages, we are seeing that it is 2,100. How much is the wages? Wages is, yeah, this one, 11,215 rupees, and as well as there is a adjustment. So first of all we will write down two wages in the inner column, 11,215, and we'll check what is the adjustment. So what is the adjustments? Wages outstanding of 50. So what is the treatment? That will be added in the trading account, isn't it? So see here, it is added, add outstanding wages 50 rupees, outer column it becomes 11,265 rupees. Clear? Now let's see what is the next item. After wages we have got KDH outward will not come here. So octroi is the only item, 530 rupees. So it will be followed up here to octroi 530 rupees. Now we saw that after octroi investment is there, investment will not come here. So let's see in the adjustment if there is anything else. Yeah, the first item, closing stock of 20,000. So it will come here, buy closing stock 20,000. Finish, all the items are placed. Now do the totaling. Credit side and the debit side separately. We can see the credit side is more, so take the higher total on both the sides, write it on both the sides, deduct the lower total. The balance is 29,760. Since the credit side is more, so we will call it gross profit. So to gross profit credit down. Okay, to gross profit credit down, and the same will be brought down here also. By gross profit brought down 29,760 rupees. Okay, now let's start with the profit and loss account. So first item, as I told you, it is the salary. So what is the salary here? Salary, it is 25,470 rupees. Is there any adjustment? Yes, indeed there is. Outstanding salary of 20, isn't it? So what will be the treatment? Two salaries 25,470 plus outstanding salary 20, outer column 25,490 rupees. Okay, so one by one we will check the other items from the top onwards. Let's see. Commission, that is in the credit side. Is there any adjustment with the commission? No. So straightforward we will write down buy commission 1,575 rupees. Let's see what is the next. After that we have got insurance premium, which was 2,700. So we saw that there is no adjustment with the insurance premium also. So straightforward we will write down 2 insurance premium 2,700. Then followed by that we have got interest, which is in the credit side, 7,425. There was no interest entry or adjustment with this. There was indeed interest on capital and interest on drawings, that are separate. This interest is separate. This is on the investment. Okay, so what is the interest? By interest 7,425 rupees. 7,425 rupees. Okay, 7,425. Then comes to the next one. What is the next item? Rent and taxes, that is 2,160. There was no adjustment. We saw in the adjustment there was no adjustment with rent and taxes, so we will directly put it to rent and taxes 2,160 rupees. Now let's see what is followed up with that. Along with that we have got carriage outward, which is 1,485. Okay, so that will also come here to carriage outward 1,485. Okay, let's see what is the next one. General expenses, which is 6,975, isn't it? So it will come here to general expenses 6,975 rupees. Okay, now let's see, anything else is left? No, nothing is left here. So we will go with the adjustments. What is left in the adjustment? We'll check it. Closing stock is done with the nothing to come in the profit and loss. Interest on capital will come in the profit and loss debit side. How much interest on capital? 10%. So what is the capital? Let's see what is the capital. The capital is 67,500. So 10% is the interest, isn't it? So 10% of 67,500 will be 6,750. So you can see here, to interest on capital, it comes here 10%. This is nothing but the 10% of 67,500, which comes to 6,750 rupees. Followed by that we have got interest on drawings, which is 5%, isn't it? Interest on drawings 5%. So what is the drawings amount? Let's see. Drawings was 19,700, sorry, 19,530. So 5% of that. So you can see here, by interest on drawings, this is nothing but the 5% of 19,530 rupees. So it comes to 977 rupees, right? Now let's see what is the next one. After that wages is done. It's provision for depreciation, which is 5% on provide depreciation on plant and machinery 5%. So plant and machinery value was, the plant and machinery value we can see 27,000 rupees, right? So we have to provide what? We have to provide 5% depreciation on that. So 5% depreciation on 27,000 will be how much? To depreciation on plant and machinery 5% of 27,000, it is 1,350. 1,350. Clear? What else is there? We have to make a provision on debtor of 5%. So what is the debtors? Just see, the debtors were 36,000. So 5% of 36,000 is again 1800 rupees, isn't it? So here is that to provision for debt, provision on debtors is nothing but the 5% of 36,000, that is the debtors. So it comes to 1800 rupees. Clear? There are no more adjustments required, no more adjustment entries. So we will go for balancing now. Now while balancing, you can see that the debit side is more. How will you know? By doing the separate total of debit and the credit side. Okay, since the debit side is more, keep the higher total on both the sides. After subtracting the lower side, we get 8,973 rupees. And what is this? Since the debit is more, so this is called net loss. Okay, and where it will be transferred? In the capital account. Clear? It will be transferred in the capital account. So let's come to the capital account in the balance sheet. Now here they are following the permanency way of solving the problem.